Can a U.S. LLC legally conduct business activities in Canada? A U.S. limited liability company, LLC, is a flexible and popular business structure in the United States. But when crossing into Canada, LLCs encounter unique administrative and tax challenges. The U.S. concept of an LLC does not perfectly translate into Canadian law, which raises an important question. Can a U.S. LLC legally conduct business in Canada? The answer is yes. A U.S. LLC can operate in Canada, but the way Canada treats LLCs for tax purposes is different, and this difference influences registration, compliance, and corporate strategy. Understanding these differences helps U.S. businesses avoid unexpected tax exposure. How Canada views U.S. LLCs? In the U.S., an LLC can be taxed as a corporation, partnership, or disregarded entity. In Canada, however, LLCs are often treated as corporations for tax purposes, even if the U.S. treats them as pass-through entities. This creates a mismatch known as hybrid entity classification, where the U.S. sees the LLC as pass-through. Canada sees the LLC as a corporation. As a result, certain treaty benefits may not apply. This can lead to withholding tax issues, double taxation risks, and unique filing requirements. When an LLC can operate without forming a Canadian entity, a U.S. LLC can operate in Canada as a non-resident corporation without incorporating as long as it complies with registration and tax obligations. It may need to register for GST to AST, file non-resident returns, register extra-provincially, assess permanent establishment exposure. Whether incorporation becomes necessary depends on the nature of the LLC's Canadian activities. Complications around permanent establishment. Like all foreign entities, an LLC must evaluate whether it creates a permanent establishment (PE) in Canada. Having employees, agents, or inventory in Canada can trigger PE status, requiring Canadian income tax filings. Since LLCs often receive different treaty treatment, failing to assess PE exposure can result in unexpected tax liabilities. Why some LLCs choose to incorporate in Canada? Because of classification mismatches, many U.S. LLCs choose to form a Canadian subsidiary or corporation. This simplifies tax reporting, client relationships, withholding tax issues, provincial registration, long-term business presence. While incorporation isn't required, it often reduces complexity for LLCs. A practical example: a U.S. LLC provides engineering services remotely from the United States. It works with Canadian clients but performs no on-site work. Operating as a foreign LLC works smoothly. However, once the LLC begins sending technicians to Canada for field services, PE exposure becomes likely. At this stage, incorporating or registering extra-provincially becomes advisable. Final thoughts. A U.S. LLC can legally conduct business in Canada, but the administrative and tax implications differ from U.S. treatment. The key is recognizing that Canada classifies LLCs differently and understanding how this affects tax obligations, registrations, and treaty benefits. With proper planning, LLCs can expand into Canada smoothly and compliantly. If you'd like more insights delivered in the same straightforward style, you can explore our website. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.